Welcome to this monthly market update for January 2025. In this video, we'll go over some of the major market drivers in the first month of the year and the start of President Trump's second term. Markets began the year with gains, despite volatility, with major indices up, the S&P 500 by 2.7%, the NASDAQ by 1.6%, and the Dow was up 4.7%. Meanwhile, economic indicators showed mixed signals. GDP growth came in at 2.3% for the previous quarter, but inflation remained above target, with the consumer price index up 2.9% from a year earlier. So let's go into some of the key events that most affected markets and the economy over the past month. First, Chinese company DeepSeek's reported AI breakthrough caused tech stock declines due to the market uncertainty that this caused. DeepSeek claimed a 95 to 97% reduction in resource and energy requirements to train cutting-edge AI models, leading to that market sell-off. NVIDIA had the biggest loss in value for a company in a single day, as it fell by 17%. And this impacts all investors and not just those focused on technology stocks. And this is because the tech sector, including the Magnificent Seven stocks, has grown in size and importance, driving the overall market. Tech sector valuations have also risen substantially compared to other market segments, and that just highlights the importance of diversification. Next, President Trump signed executive orders to implement new tariffs, 25% on Canada and 10% on China. And he also signed an order for a 25% tariff on Mexico, and then agreed to postpone for a month in exchange for concessions on border security. And these tariffs were expected, but they have rattled investors nonetheless. And it's important to keep in mind that the first Trump administration's tariffs also led to investor concerns. And markets still generally performed well over that period, and tariffs were often negotiation tools to achieve trade deals, such as the US-Mexico-Canada trade agreement and the Phase 1 deal with China. Meanwhile, the Fed maintained interest rates at the 4.25 to 4.5% level at its January meeting. And this was following 3 consecutive meetings of cuts as a result of the slight acceleration in inflation, a strong job market, and continuing economic growth. And January markets experienced overall gains despite volatility, highlighting the importance of maintaining a long-term focus when it comes to investing. And as these developments escalate and the tariff story evolves in February, investors should maintain perspective and not overreact to day-to-day news. So we hope you found this monthly market update helpful. And if you'd like to discuss any of these topics in more detail, please don't hesitate to reach out. We look forward to speaking with you.